Indonesia's rupiah fell to the weakest level in almost 11 months, as reports showed exports contracted more than forecast and inflation accelerated. Talking through this data with me is Peter Jarrett, Head of Division at OECD. Welcome, Peter. Starting with Indonesia's balance of trade, out of negative territory, it now sits at $20 million US. A positive move? What does this mean in longer terms?
Yeah, sure. It's a positive move. That I would maintain because the external imbalance, the current account deficit, and the funding pressures that it causes is the market's key concern. And so any positive point like that is a little bit of a tonic. And that comes along with the lower than expected inflation print that came out yesterday, which signals possibly lower pass-through from the fuel price hike that took place a few weeks ago. The currency has depreciated a lot, and that may be starting to help already on the trade account. But the ore ban, the export ban on ore that the government started enforcing about a year ago, that's been very harmful to trade in that particular area, metals. The longer-term problem, though, is declining competitiveness in non-commodity sectors, and that remains to be tackled. And the other problem is the lack of capacity in oil and gas production caused by the chronic lack of investment. So the top priority for the new government should be to do whatever it takes to overcome infrastructure bottlenecks, to improve logistics, and to attract investment into the oil and gas sector.
Let's have a look at the rupiah. It fell to an 11-month low after the release of data. A knee-jerk reaction or an indicator of something more?
Well, the rupiah has been on a declining trend against the mighty dollar since last spring, but of course its trade-weighted value has held up much better since the yen and the euro have also fallen quite sharply against the greenback. The trend was interrupted in the run-up to the presidential election in the summer, and more briefly around Mr. Widodo's installation, but otherwise it's been pretty clear and pretty steady. As I said, in and of themselves, these data are actually quite positive and should not have caused a sell-off in the rupiah. So I would ascribe the down move only to persistent fears that the high expectations for reform from the new administration will be disappointed, either because of a lack of ambition as occurred under the previous government, or because an obstreperous parliament will block such moves.
The HSBC Purchasing Managers Index for Indonesia fell to 48 last month from 49.2 in October. What were the factors attributing to this figure?
Well, that's a tough one. The big decline may be a response to the recent cut in fuel subsidies and the related uncertainty of what that's going to do. But it may also be because of weakness in export sectors that rely heavily on the Chinese market, which has been weak of late.
Thanks, Peter. Great to speak with you. That's all from me for now, but do keep clicking back to the Dukascopy TV website for regular updates and exclusive interviews. Bye for now.